Hey everyone, welcome back to Corporate Decoder, the place where we unravel the tangled web of corporate filings and find the golden nuggets of truth hidden within. This year, Coupang is dropping its 2025 Form 10K, and let me tell you, it's a chunky one, packed with more details than a Black Friday ad. First off, Coupang is still a major player globally, offering everything from retail and restaurant delivery to streaming and fintech, all under brands like Eats Play and the recently acquired Farfetch. They're all about making customers' lives easier and have organized their business into two main parts: product commerce, which is their bread and butter in Korea, and developing offerings, which includes newer ventures and the luxury fashion marketplace Farfetch. Let's dive into what really matters to investors, the financials. The year 2025 was interesting for Coupang. Total net revenues hit a hefty $34.5 billion. That's a solid 14% jump from 2024. On top of that, when you strip out currency swings, their revenue growth actually looks even better, jumping 18% on a constant currency basis. That tells us their core business is growing well, even when you ignore the ups and downs of exchange rates. In their main product commerce segment, revenues grew 11% as reported and a strong 16% in constant currency. This growth is thanks to more active customers and them spending more per customer. They're seeing more engagement across different product categories, which is a great sign. The developing offerings segment, which includes things like Eats, Play, and that big Farfetch acquisition, saw even faster growth, shooting up 38% as reported and 40% in constant currency. This shows that their newer ventures are really starting to gain traction. But here is where things get a bit nuanced. While revenues are up, Coupang's net income for 2025 was $214 million. That's a big jump from $66 million in 2024. But remember, 2023 saw a net income of $1.36 billion. So while profits are looking up compared to last year, they're still a ways off from where they were 2 years ago. This suggests they're still investing heavily in growth, which is good for the long term but impacts short-term profitability. Their adjusted EBITDA, which is a popular way to look at a company's operating performance before certain costs, was $1.49 billion for 2025. This is up 8% from 2024, but their adjusted EBITDA margin actually dipped slightly to 4.3% from 4.5%. This often means that while sales are growing, their costs to generate those sales are growing just as fast, or even faster. Now let's talk about free cash flow, which is the cash a company generates after accounting for capital expenditures, was $527 million in 2025. That's a significant drop of 48% from 2024's $1.016 billion. This big decrease in free cash flow is mainly due to increased spending on property and equipment, a whopping $1.25 billion in 2025, mostly on building out their fulfillment and logistics network. This is a classic sign of a company heavily investing for future growth. Now, a really significant piece of news from late 2025 was a data incident. A former employee accessed customer data, impacting around 33 million accounts. Thankfully, no payment information or login credentials were compromised, but the consequences are substantial. Coupang announced a customer compensation program for roughly $1.2 billion in vouchers, which will hit their revenue and profits in 2026. Plus, there are ongoing government investigations and lawsuits piling up, which could mean hefty fines and more costs. This incident really highlights the risks of operating in the digital space and shows how crucial cybersecurity is. We also need to talk about the Farfetch acquisition completed in early 2024. In 2025, they continued restructuring Farfetch, which unfortunately means more acquisition and restructuring costs, impacting their financials. The integration is ongoing and it clearly adds complexity and costs, but they believe it is key to expanding into luxury retail. Coupang itself is very upfront about its risks. They mention significant fluctuations in operations, and their business is rapidly evolving. This means they are betting on long-term growth, sometimes at the expense of short-term profits. They also highlight the intense competition they face, and how failure to innovate could lead to losing market share. Given the data incident, this risk factor is more relevant than ever. They're facing scrutiny from Korean authorities, which could lead to fines and business restrictions. They've also been hit with several class action lawsuits in the US directly related to this incident. Regulation is a big concern for Coupang, especially in Korea. New laws around online platforms, fair trade, and even nighttime deliveries could impact their business. For example, a ban on nighttime deliveries could hurt their popular dawn delivery service. They're also facing investigations related to bundling Eats with their WOW membership. which could force them to change how they offer these services. And let's not forget the geopolitical risks. Coupang operates heavily in Korea, and the report explicitly mentions that tensions with North Korea or any global conflicts could indeed impact their business. Their reliance on the Korean economy means that any instability there directly affects their bottom line. Looking at their stock, Class shares are traded on the New York Stock Exchange under the symbol CPNG as of late February 2026. They had over 1.6 billion Class shares and about 157 million Class B shares outstanding. A notable point for investors is their dual class share structure. Mr. Bom Kim, their CEO, holds all the Class B shares, which together represent over 74% of the voting power. This means that while you can own shares, Mr. Kim has a very strong influence over major company decisions. The filing also points out that this dual class structure might make it harder for them to be included in certain stock market indexes, which could affect their stock price. Now, my take on all this, Coupang is clearly a company focused on growth. They are investing heavily in infrastructure, expanding into new markets and services, and are even making big strategic acquisitions like Farfetch. This aggressive approach has driven impressive revenue growth, especially on a constant currency basis, which is a strong indicator of their underlying business health. However, this growth strategy comes at a cost. Their free cash flow has taken a hit, and they've seen a significant drop in net income compared to 2023, even though 2025 shows improvement over 2024. This is typical for companies in a high growth phase, but investors need to be comfortable with this investment first approach. The data incident is a major red flag. While they learned from it and are compensating customers, the ongoing investigations, lawsuits, and potential regulatory fines are a significant risk and will weigh on their finances and reputation in the near future. The impact on customer trust and potential future costs are a big unknown. On the flip side, their core product commerce business in Korea remains robust, showing solid growth in active customers and spending per customer. The developing offerings segment, despite its losses, is growing rapidly, suggesting they are on the right track with diversification. Ultimately, Coupang is a company with a clear vision for the future. Even if the path there involves significant investment and navigating a complex global landscape with increasing regulatory scrutiny and geopolitical risks, the question for investors is whether the long-term growth potential outweighs the short-term financial pressures and the very real risks highlighted in this filing. Alright, that is our deep dive into Coupang's 2025 10K. What do you think about their investment strategy and the impact of the data incident? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more corporate decode sessions. And hey, don't forget to join our Discord community, linked in the description, where we discuss these filings and more. Thanks for watching, and I'll see you in the next one.